Kevin Retcher here. Today, I want to talk about the key benefits of my favorite loan, which is a VA home loan. Here's the thing, it is the most powerful loan out of all the loans that we have available. FHA, conventional, VA. VA, hands down, is the most powerful and has the most advantages for not only the consumer, but for realtors and for lenders. Here's the thing, you have to be a veteran, active duty service member, or an eligible surviving spouse to be eligible. Once you have that benefit, it does not expire. So if you were in the service 40 years ago, you can and you don't have a loan out there outstanding on a VA loan, you can absolutely do another VA loan. Okay. The key benefits, let's get into those. One, zero down. No down payment is needed. You don't have to save 3 to 20% to get out of MI because there is no MI on a VA loan. That makes it cheaper and more cost effective for a veteran to be able to buy a house. All things being equal, incomes on a conventional and on a VA loan, if two clients had the same income, they're going to qualify for more home with a VA loan. A lot of people don't think about that, but that is the case. There is no mortgage insurance on it because of the VA guarantee. The VA guarantees 25% on the dollar to the bank if the veteran actually was to go into foreclosure. So no mortgage insurance is needed. On a conventional or FHA, mortgage insurance is needed if you do not put 20% down. You ask, why does the VA do that or how do they do that? VA guarantee is financed through the VA funding fee that is required on veterans loans, both refinance and purchase if they're not exempt for a VA disability. So first time use on a purchase is 2.15%. It gets added on top of the loan the one time. If you buy and sell a house and then go buy and sell another house, the second time use is called subsequent use is 3.3%. But here's the thing. If you do have 5% or 10% because you sold the one house and you're buying another, if you put 10% down, the VA funding fee drops to 1.25, and if you put 5% down, it drops to 1.5. And those both can be financed on top. But here's the thing, because of the VA guarantee, guess what you get? You get a lower interest rate. That's right. Some of the lowest interest rates on 30-year fixed mortgages are on VA loans because of that guarantee. So it saves you hundreds of dollars by not having MI, hundreds of dollars and thousands of dollars over the life of the loan in a lower interest rate having a VA loan. So all things being equal, if you compare a VA to a conventional, the person with a VA actually qualifies for more home. That is a positive, right? The VA also protects its veterans in making sure that their guidelines are followed and making sure that everything that is a positive for the veteran, the Veterans Administration is going to try to do, right? An example of that is interest rate reduction refinance loans. So let's say you've closed on a loan and you own a house, interest rates fall. If you've had the loan for 210 days and you can do a refinance, lowering your rate by 0.5% or more and recoup your costs within 36 months, they let you streamline that. You just need a 12-month history to do a refinance, and you're typically done in about 2.5 weeks. And there's no appraisal, no income check. Super simple. How can that be used to your advantage? Let's say you're getting ready to retire and you still have a mortgage out there. If you have a conventional, you might not be able to refi, but if you have a VA loan, you're going to be able to refinance that if interest rates drop, whether or not you have a job or not. They also have, the VA loan has more flexible income and ratio guidelines. Lower credit scores don't get dinged nearly as much as a conventional loan. MI on a conventional loan goes up, worse the credit score. On a VA loan, we don't have that, right? So it's better. They also allow ratios to be above 50% in some cases. What the VA does is they use um, residual income as a factor. So after all your bills are paid, how much money is left over? And is that enough per individual that's in the house? So if there's four mouths to feed, they factor that in and they come up with a number of residual monies left over after paying all your bills. And if that's enough per the algorithm, they will approve that loan. So there's not a set amount of debt to income ratios on a VA loan. Likewise, there's also not a set minimum credit score. So there's more flexibility when it comes to that. So not only does the VA help you get into homes quicker, save you money with no MI, it protects you on refis, even if you're upside down. If you're exempt, you don't have the funding fee. All of these factors make the VA loan the best loan in the land. Now, here's the elephant in the room. There are some agents out there that do not like VA appraisers. And they don't like VA loans because of the appraisers, but that's because they don't understand. Here's the thing on a purchase, there's a thing called Tidewater. It protects you as a veteran, but it also helps real estate agents, and they just don't understand it. The reason it helps them is if a appraiser's coming in low, he's supposed to issue Tidewater. What Tidewater means is he opens up the avenues for the agents to give him comparables to try to come up to the value that is on the purchase price, right? That's an advantage. As an example, if a purchase price is 600,000 and he can only get to 580, if there's two private comps that justify the 600,000 that he didn't find, you're able to communicate that with the appraiser, and he might come in at 600,000, accept that, and everyone moves down the road. If not, that 580 appraisal is going to stick, and then the veteran has a choice. He can pay the $20,000 difference. The seller can negotiate down. There can be a negotiation in between, but that VA appraiser is protecting both the veteran and the bank, and also agents by being able to use the Tidewater to everyone's advantage. The other thing about it is safe and soundness. That's all they're really asking for on a VA loan. If a handrail is needed, or there needs to be extra step here or there, they're just trying to protect the veteran and the new homeowner. Most of those things can be paid for by the seller or even the veteran who wants to buy the home. So in general, if I was looking at the pros and cons of taking a conventional loan or a VA loan, I'm going to take the VA loan because one, the person served our country. Two, they don't have MI, they have lower interest rates, they have more flexible ratios, more flexible credit. I personally, on all the loans I've qualified over my career, have never had a VA loan denied based upon any of those criteria. Um, in general, the VA loan, in my opinion, is the best loan in the land. My name is Kevin Retcher, owner of First Meridian Mortgage. If you have any questions about your VA loan, if you have any questions about getting a VA loan, by all means, give me a call. If you need help getting your certificate of eligibility or finding out, in fact, if you're eligible, just give me a call. Doesn't matter whether or not I service the state that you're in. I can help you get your certificate of eligibility. I also have 34 other states covered with other veteran owners just like me, broker owners that would be happy to serve you. My name is Kevin Retcher, owner of First Meridian Mortgage. Talk to you soon. To all the Marines out there, I say Semper Fi. Talk to you soon.